Welcome back to Forex Focus, brought to you by IG. A highly anticipated day in economic events lived up to the hype in terms of market movement. We had a great reaction back and forth in the US dollar, stocks and bonds as the Fed revised their rate forecast a little bit higher. We'll take you through the CPI data release, what the shakeout was with that June FOMC meeting, and how markets like the US dollar reacted. Let's start at the beginning of the day with some lower than expected CPI data, causing a pretty outsized market reaction to start the US session here. An extra 0.1% move lower. Here we're looking at the core CPI inflation year over year, dropping down to 3.4%. And that caused a significant move in US dollar and fresh all-time highs for the S&P 500 pre-market and throughout the morning. That US dollar move, though, man, was really taking off some gains made earlier in the week, particularly against the Australian dollar. AUD USD moving as much as 1.4% higher on the day as we rose in the euro, the pound, and other major currencies like the Japanese yen. And that price action continued throughout the morning and into the afternoon as we got into this June FOMC meeting that ended up not shaking things up as much as the CPI release did, even though this was expected to be the main event of the day. We had a rate hold as expected. The Fed's been very good, taking a cautious approach, not wanting to surprise markets with any surprise rate cuts or rate hikes over the past 2 years or so. But they did release their updated dot plot, which is what we're looking at. We get one of those every other meeting usually, and so this is a revision from the March FOMC meeting. And the main talking point here was that that median forecast among FOMC members is now looking at 125 basis point rate cut by the end of 2024, and we only have a handful, 4 meetings left in this year. So really getting down to the nitty-gritty of when this rate cut will come. We've been expecting something to happen this year. Now only one rate cut expected. And even some of those revisions, like in 2025, those are moving higher, above that 4% threshold in a year's time. So that was the main takeaway. Nothing crazy from Powell's testimony after the meeting. Some solid reporting on positive numbers in the growth sector, or in the jobs sector that we saw on Friday. Nothing too alarming there, and the Fed seeing this CPI data release as a good sign, changing their language around inflation as a result of it. But the interesting part is that we're not seeing markets, here we're looking at futures markets, we're not seeing markets react to the Fed's language as law. Still pricing in 2 rate cuts this year. Here looking at the CME's projection, you're seeing a greater than 60% chance right now after the meeting of more than 125 basis point cuts coming from traders, as people, like I said today, are favoring that CPI inflation release over what the Fed had to say at this June meeting. They know that the Fed can kind of say whatever they want at each of these meetings, but believing that the numbers don't lie and that this inflation is ticking lower as it should be, and maybe there's another unexpected drop in inflation coming from PCE inflation in the future, or maybe in June and July we see greater drops in the CPI inflation. Who knows? But right now traders expecting more soft data to come, and the Fed to maybe in the future in July, September, to 1, begin cutting, and 2, cut more than just one time this year. We'll see where it goes. But getting into that dollar reaction, dollar reacted strongly to both the CPI inflation reading this morning and to this FOMC meeting. We're looking here at the British pound against the dollar. That shot up through 128 to a new 3-month high in this pair, and then off of that Fed meeting coming all the way back down under 128. So a lot of movement here in the dollar today, and now bouncing back in the afternoon across all major currencies. Most of them still weak on the day, but definitely erased a lot of those gains other currencies made against the dollar in the morning. US dollar coming back strong as, all things equal, higher for longer rates, as the Fed signaled, would create a greater yield for holding this US dollar against a lot of these currencies. Always a lot of factors at play in the currency market, always comparing two currencies to each other. So a lot of factors here, but when looking just at US dollar, US rates, the shakeout from today is inflation lowering more than it should be, but rates could stay higher for longer. We'll see where it all shakes out, what it means for US dollar and US markets. Thanks for watching.